Hello, Marc Ostwald from ADM Investor Services International. With some thoughts on the PMIs that we're getting through, the strength of the yen versus the dollar, and the weakness of the overall dollar index, and perhaps looking at some of the factors which are playing into that. But I start today with a little review of the data that we've had today, which doesn't make for great reading for Japan Inc., as we like to call it. We've had the exports data, which proved to be weaker than expected at minus 4.2% year on year. And as one can see on my first chart, perhaps the most important part of this, which is the exports year on year from Japan, is Japan actually hasn't seen growth in exports for 2 years. Hardly something which one would expect to see a strengthening currency. To exacerbate that, we've also had the Japanese PMIs today. And again, perhaps most importantly in terms of manufacturing, we are still not really seeing any meaningful recovery. And again, for 19 months, the Japanese manufacturing PMI has actually been in contraction territory, albeit only very modestly now at 49.7. I think the critical point here, though, is to compare it with what the picture looks like elsewhere, because Japan is meant to be a manufacturing powerhouse, and yet the recovery that we're seeing elsewhere, whether it's the UK, where the manufacturing PMI today was 57.3, whether it's China, the last reading, obviously, in terms of market ones we have is for November, 54.9, the US, November, 56.7, and we've had the Eurozone reading, which was 55.5, albeit showing some divergence there. Of not inconsiderable size between Germany and France. That's sort of by the by, but it's not something that one would expect to see resulting in a strengthening currency. But as my third chart for today shows, which is the dollar-yen level, we are gradually sort of chipping away at levels which the Japanese authorities clearly are going to feel increasingly uncomfortable with. And when one has in the background that profile of exports from Japan being as weak as they have been in growth terms over the past couple of years, this is certainly not going to be helping matters. And it's little surprise that the BOJ has extremely extraordinarily, as Ministry of Finance, tapped a extra line of $6 billion to perhaps be more prepared if it needs to intervene on this particular side. But this yen strength, as much as some of it is to do with safe haven demand, and also to do with demand of inflows into Japanese equities, which look cheap if one looks at it on a relative value basis to a lot of other countries. They're not necessarily on that economic basis when one was looking at those PMIs. It's not all to do with Japan. It's certainly a lot of that strength has to do with the weakness of the dollar. My fourth chart today is one which we've sort of looked at before, and as one can see, having strengthened quite considerably over the period between early 2018 to the start of 2020, it has in the meantime started to decline quite markedly and is now testing the lows, which is sort of logical when one looks at it in comparison to the CPB, Dutch Planning Bureau World Trade Volume Index, which shows a fairly sharp recovery. The last data point is obviously for September, and therefore it will strengthen more. But it also has to do with the fact, and this is my fifth and final chart, that people are concerned about US total outstanding debt, and the fact that this may actually come to weigh on the dollar as we go forward. I think in the longer run, people will need to think very closely about how much the yen can strengthen given the underlying fundamentals.